Om Namo Venkatesaya. Esteemed Chairman of Erode Branch, Mr. Kumar, Secretary Tangaveli, my colleague in the recent constituency, Raju, a senior learned member of our profession, Sri Kanaswamy, past chairman of this branch, dear members. It is indeed my pleasure to stand before you today, Vastu Puja in the morning, having invoked the blessings of the cosmic power, an opportunity for me to address you. The branch is 25 years old. 8 years back, it seems, ground floor is inaugurated. And 4 years back, the first floor is inaugurated. And now, a new building is taking its shape. This shows the active participation, the interest of the members in making the profession an identifiable entity in the society. I wish in the days to come, definitely the Erode branch will have its own mark in the southern India. Chairman was telling me in the morning that today in the forenoon, the topic being non-profit organizations and especially the charitable institutions, the invitation was extended to several schools and colleges to know where they are. So the topic given to me is for these charitable and religious institutions, formation, drafting, documentation and taxation. All this I have to cover in 1.5 hours. So definitely I will try to make it. I am sure something can come out in this 1.5 hours, though I may not be able to cover exhaustively all the bases of this talk. In my paper I started with the question, is Road Transport Corporation a charitable institution? How many of you say yes sir? Yes sir. Venkatraman sir said it is a charitable institution. How many of you disagree with him? I don't think the silence you are giving concurrence to him. Yes sir. So he is right till 2008-9 assessment year, but not now. The Supreme Court in the case of the SIRC case held that it is a charitable institution entitled for the registration and Section 11 exemption. The Supreme Court held. So for a common man's angle, what is commercial is different from the viewpoint of the income tax. I would like to make a statement and then elaborate it. All charitable organizations are non-profit organizations, but all non-profit organizations are not charitable organizations. Please, from the Income Tax Act point of view, I am making the statement, I will try to elaborate it. For example, you have a neighboring apartment. The apartment owners want to start an association. Is it a profit organization? Is it profit-oriented organization? Definitely not. But at the same time, is it a charitable organization? No. Definitely not. So, non-profit organizations are several. For example, laborers or employees associations. are non-profit organizations only. But they are not charitable because the object is to serve themselves, to serve the members for a specific cause, but not for the social benefit, not for the benefit of the public at large. So from the income tax point of view, we have to be very careful in giving the shape of an organization when somebody comes and approaches you. For example, some lorry owners of Erode may come and ask you to draft an association for this lorry owners welfare association, please draft. Then what is it that we have to keep in mind, and how to draft it, how to form it, and how to guide them in its management is the topic which we are going to see. I will put another question. There may be a temple of 300 years old in the outskirts of Erode. The temple 300 years old was managed by the erstwhile Raja of a particular area. Then the dynasty disappeared. Maybe the government abolished of privy. So the kingdoms and kings disappeared. Then the people of that family also have lost interest in managing the temple, and the local well-wishers, the local surrounding people have formed a committee and they have been managing, say, for the past 100 years. Maybe in some areas, the special particular caste people maintain a particular temple. Those caste people only will have the privileges of doing puja and praying or say managing committee or these things. Now my question is this temple an accessible entity under the Income Tax Act? The temple is having income, let us say. They sell the tickets, they do something, they get a hundi and then collection, all these things. Is this temple a taxable entity or not under the Income Tax Act?
No. It will come under HRC.
Sir?
It will come under HRC.
Sir, the answer, first part is, it is taxable, separate taxable entity under the Income Tax Act. Second part, it will come under the Hindu Religious and Charitable Institutions Endowments Act. Every state government has enacted this particular Hindu Religious and Charitable Endowments Act. Similarly, Waqf Act for Muslims, Dargah, Eidgah, Maidan, Masjid, for their management, Waqf board will be there. So the Waqf Act will govern the principles. So a particular religion is having a particular set of rules. So what the Hindu Religious Charitable Endowments Act says, any public worshipping place, if it is with public money, the government can notify that temple or that particular place and then take over the management. They will appoint, depending upon the receipts of that particular temple, up to a particular level, 50,000 rupees, some ordinary clerk, up to 2 lakhs, some officer, above 5 lakhs, some assistant commissioner, deputy commissioner, if it is say per annum 1 crore and above, some deputy. My subsequent supplementary question. A temple that is managed by a deputy commissioner or assistant commissioner of the Endowments Department, is it accessible entity, is it liable to pay the income tax or not, is my question. Now the answer, sir? Accessible. Even if the deputy commissioner or assistant commissioner manages, you please see meticulously what is the role they play. They cannot credit the receipts of this temple to the government account. Government treasury is nothing to do with this temple receipts. What all the assistant commissioner, deputy commissioner of the Endowments Department is doing is only administration. He is empowered to administer. The property belongs to the deity. The receipts belong to the deity. Deity is the owner. He is only managing. So a particular bank account he will open and all the receipts he will deposit there. Surplus he will make it as FDs. Surplus shall be again used only for the temple. At best what they do is their salaries they recover from that receipts. Their salaries are governed by the state government rules only, not by another method. And the government will charge to the common good fund some 5%, 2% depending upon the state. Each state has got its own legislation. So some percentage of the receipts they will transfer to the common good fund for having managed it, and the state audit, generally known as local fund auditors, they will audit those receipts and payment account. But under no circumstances, either the property or the cash or the jewelry or valuables shall be taken over by the state government. State government is a secular government, state or union, and the government has no role to take over the total assets or the receipts to its account. As a trustee, as a custodian, instead of individual trustees, the government will act in those circumstances as a trustee, so the government endowments department manages such temple. So the Income Tax Act says every trust or institution, if you go through the words of section 11, 12, 13, never they use the word person. Only for the other sections you will find the words person for the heads of income computation, whereas for this taxation exemption of these non-profit organizations and religious institutions, the words continuously used either section 1023C or 11, 12, 13 or 80G section, they use the word trust or institution but not the word person. Why the differentiation? The Income Tax Act has not defined the word trust. The Income Tax Act has not defined the word institution, but it used the words. Why? Now let's go to the word trust. Now the first part, as I said, is a formation of these institutions. Formation means choosing the entity. We as auditors must give a shape. Which shape is sufficient? Which shape is more appropriate to start with? So there are a number of ways, not less than 6, let us say. The Societies Registration Act 1860. In Andhra Pradesh, the Societies Registration Act 1860 is repealed and is substituted, not repealed, is substituted by AP Societies Regulation Act 2001. The Tamil Nadu such act has been 1974. So 75 says. So some act will be there. The 1860 is the Union Act. Each state government duly modifying will have its own Societies Act. So either a trust or a society. 3. A section 25 limited company, Companies Act 1950 having section 25 which says either for religious or charitable purposes a limited company can be formed. You see, the Companies Act being a secular act is having the words in section 25 for a religious purpose. You can form a limited company. That is section 25 company. 3. 4. A cooperative society. 5. A mutually needed cooperative society. Now, this microfinance, the Dwakra groups, thrift, given the trust by the government. So, every state government has promulgated an act known as Mutually Needed Cooperative Society. In Andhra Pradesh, Max Act 2005 is there. In Tamil Nadu, sir? Not yet. In Andhra Pradesh is there. Actually, you would have seen in the newspapers, in India, 30% of the microfinance business is in Andhra Pradesh. So Andhra Pradesh is having a good activity, good potential activity. So they, to safeguard their interest,